a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about ETFs that are very popular on Robinhood platform. And as we know, Robinhood is a mobile app that started the trend of commission-free trading and now has over 13 million accounts. And in fact, most other US brokerages also had to go to zero commissions only because of Robinhood. So in a way, Robinhood democratized the business of share trading, and they have become synonymous with retail investing, particularly amid pandemic where millions of people stuck at home. They are trading in stocks, and a lot of them are young, inexperienced traders, investors, which is great that they are investing because we are in a bull market thanks to Fed. So everyone should take advantage, but we should understand what we own. So that is why I decided to do this video. And a lot of investors are following what Robinhood users are betting on. And in fact, there's a website called Robin Track, which was founded by a 23-year-old college student as a side project. And that has seen a lot of interest because it reveals what Robinhood people are investing in. So today we are talking about ETFs that I saw were using Robin Track, that they are very popular on Robinhood. So the most popular ETF on the platform is USO. It's the largest oil ETF, United States Oil Fund. And the other two most popular are also oil ETFs. Of course, this is a reopening trade because as economies have started reopening, people have started driving, more planes are flying, and oil has rebounded nicely over the past few weeks. And I would not talk a lot about these ETFs because I did a video about a month back. Should you play the oil rebound with ETFs? So you can watch that video to learn more. But quickly, UCO and USO, they bet on WTI crude using futures. So they are commodity ETFs. And Gush, this tracks an index of oil and gas companies, so equity companies, equity ETF. UCO and Gush are leveraged twice. They aim to provide twice the daily return of the index that they track. So they are very risky, leverage a lot of care is required in trading of these ETFs. Then I saw some broad market ETFs, which are suitable for core portfolios, are also very popular. And this really made me happy because these are excellent ETFs. The Vanguard S&P 500 ETF, ticker symbol VOO, and the Spider S&P 500 ETF, ticker symbol SPY. They both track the same index, the S&P 500 index, 500 largest companies in the US stock market. But VOO is the cheapest that tracks S&P 500 index. It charges just 3 basis points. And this is also very popular with 149 billion in assets. SPY charges 9 basis points, but it is the oldest, largest, most actively traded ETF. So very popular with traders. If you want to trade more in and out, then SPY is suitable because of better liquidity. But for buy and hold investors, VOO is the best. So let's quickly take a look at VOO. You can go to the quote page on Zacks.com. You can read our research report, articles, and you can also go to the external homepage, Vanguard's webpage for the ETF, and look at the holdings and other details. And these are all familiar names: Microsoft, Apple, Amazon, Facebook, and Google. These are the top holdings in the fund. And Since SPY tracks the same index, I will not repeat the process. But VTI, which is Vanguard Total Stock Market ETF, is slightly different. It tracks the entire US market, which means you will get mid cap, small cap, micro cap companies too, which are traded on the US stock exchanges. Basically, the entire US stock market, more than 3,400 holdings in one ETF. This is also very cheap, just 3 basis points, and very popular with 146 billion in assets. To take a look at VTI, again, you can go to the quote page on Zacks.com. And from there, the external homepage, the Vanguard web page. Now, because the large companies dominate the US stock market, you will see same holdings, but in slightly lower weights, but you will get some exposure to mid caps and small caps as well. You see that about 8.5% to small companies, 14.5 to medium companies, 5.1 to medium and small companies. Then I saw that cannabis and airlines ETFs were also very popular. MJ, which is the first and largest cannabis ETF, it has about 590 million in assets and charges 75 basis points. So let's take a quick look at MJ. Again, let's go to the quote page on Zacks.com. And from there, you can go to the external home page. GW Pharma, Kronos, Canopy, Aurora Cannabis. These are the top holdings in the ETF. And cannabis stocks and ETFs, they had a terrible 2019. And earlier this year also, they were underperforming, but they started rebounding in March. So some people are looking at that rebound trade. And in fact, I did a podcast recently on cannabis investing. You can go to the podcast to learn more. And then the airline ETF, which is basically a reopening trade because people are flying more as the economies have started reopening. US Global Jets ETF, ticker symbol JETS, is very popular with Robinhood investors. It is the only airlines ETF. It charges 60 basis points and has over 1.4 billion in assets, and a lot of these assets it has gathered only in the past few weeks. This is one of the fastest growing ETFs this year. And you can go to the quote page and from there the external homepage to learn more about the holdings. It has largest exposure to US Airlines, Southwest, Delta, United, and American. And then it also holds some international airlines. And I did a podcast with the founder of this ETF too. So if you go listen to ETF Spotlight podcast, you can find out more about cannabis investing and airlines investing. Now let's take a look at the performance. So on this slide, I have the year-to-date performance, and most of these ETFs have done terrible if you look at the year-to-date frame. S&P 500 and total market ETFs, they are down maybe 2-3% this year because technology, the Nasdaq is the only major index which has done really well this year. Then you will see that cannabis ETF is down more than 10%. The JETS ETF is down about 45%, whereas USO is down almost 75% year to date. On the next slide, I have the performance over the past 1 month. And I I looked at the performance over the past month too, because these are basically reopening trades when market has economies have started reopening. So that is why some of these ETFs have rebounded strongly. Now, whether that rebound can continue or not, we do not know. But let's take a look at the performance. The oil ETF has done best, up about 45%. The Jets ETF is up about 30%. And the cannabis ETF is up about a little more than 20%, whereas the S&P 500 and total market ETF are up about 12% year to date. Sorry, 12% over the past 1 month. Thanks for watching, and also be sure to check out zacks.com/promo for an interesting deal. I'll see you next week.